venture capital is a very particular type of fuel. I think of it as nitrous oxide. It makes you go really fast, a little bit out of control. Some engines are built for it and they can handle it and they just like break through to the other side. Companies like Facebook, Google, etc. Some companies, it's like you should never have taken that money.
Hello and welcome to Confessions of a B2B Entrepreneur. My name is Tom Hunt, your host, and today we have Manish Patel, who is the founding partner of Nava Ventures. So this is, I believe, the first VC we've had on the show. And so if you're looking to fundraise or you're just trying to understand what VC is, I would highly recommend listening to the episode. We basically cover the state of VC as it currently is. We actually get Manish's behind the scenes views on working at Google with Larry Page, and then also what you need to look for in a VC if you do want to raise money. So we'll jump into that in a second. Before that, quick shout out to Fame, who are the producer of this show. If you like a show like this one, please go to fame.so, request a proposal. Let's jump into the discussion with Manish now.
This episode is sponsored by MailTrap, an email delivery platform designed for product companies. Go for high deliverability, growth-focused features, and industry-best analytics. Get 20% off for all plans with our promo code B2B Entrepreneur. Check the details in the description below.
Manish, welcome to the show.
Great to be here, Tom. Thanks for having me on the podcast.
So everybody listening, Manish is the first and the best VC we've had on the show, roughly 150 episodes to date. And I definitely would have remembered if we had a VC on. So I'm honored to have our first VC on the show.
Oh, far too generous with that.
And we're going to theme the episode on raising money and how you as a B2B entrepreneur can best raise money from a VC, and also the state of VC at the moment. And also whether you should go for it. We'll cover that as well. But before that, we obviously need some context on the VC that we have here. So, Manish, I'd love to understand your journey, like even before you started working, because I think it was Google you were first at a while back.
Mm-hmm. Mm-hmm.
So let's just go through the journey and then we'll transition to VC.
Yeah, absolutely, Tom. Well, I'd frame it as I am the accidental venture capitalist. I think some people, especially a lot of young people today, are kind of, that's my dream job, or I want my career to be that. If you look back to like the little Manish, many, many years ago, I had no idea about venture capital. My family's from East Africa, Uganda. I was born in the UK, grew up most of my life in rural Kentucky, of all places. So I lived in motel rooms most of my life too. So it was a very kind of odd way to grow up, some very humble roots. I was fortunate to have like an amazing family and some amazing people around me that gonna kind of help me get to that next level. And my kind of eyes were open to technology and venture capital when I attended Stanford University, which is kind of the heart of Silicon Valley in Palo Alto, California. So my freshman year at Stanford was right after the first .com bust. And I was like, wow, these companies like, 2-3 people, a dog in a garage can go build something that changed the world. I was like, that's amazing. Like, I love that, And so I studied engineering at Stanford and economics, and post Stanford, I was fortunate enough to join this fast growing startup, and that was Google. I think the life lesson is better to be lucky than good. I learned from so many incredible people at Google during that company's kind of hyper growth journey. Spent most of my 20s there, fell in love what it meant to build companies and products at scale. And that eventually led me to a career in venture capital.
I think I read somewhere that you worked like with Larry Page. Is that right?
I did. Yeah. So that was an amazing experience.
And so when you say worked with, like you were reporting to him or you're like in meetings with him, like what do we mean?
Yeah. No, I didn't report directly to him. I was many, many levels down the organization. What I did was Google had this process called OKRs, which a lot of people use today. A lot of entrepreneurs use today, objective and key results, which came out of Intel and process there that John Doerr had seen and brought over to Google. And basically it was this kind of lightweight management tool to run the company. Google was not a hierarchical company. It wasn't something where, there were direct kind of command control, kind of here's my vision, this is what we're doing. It was very much a strategy of letting 1,000 flowers bloom. And I had the dubious honor to work with Larry. There was a very good friend of mine, Leslie Chan, was working with Sergey Brin on this process. Leslie's a phenomenal VC, legend of legend, brilliant guy. he started his own venture fund as well. It's super successful. And he was doing that with Sergey. And then I got anointed to do that with Larry. And it was just such an amazing experience. So I got to work so closely with him during those early days. And, oftentimes it gave me an excuse to talk to all these executives, to be in the room as interesting decisions were being made and, just taking notes and that sort of thing and just hearing like different strategies, how we think about things. And, when you're 22, 23, it's just like, wow, this is amazing, right? And the further I am from that moment, the more I appreciate sort of how incredible Google was. So, and then how they thought about goal setting and strategy from some of these brilliant minds.
And what was it about Larry, do you think, that's like enabled him to build such the best company of all time?
Yeah, I mean, I think there's multiple factors, right? I think that's something, he's brilliant. He's obviously, he and Sergey are just unique individuals that created something very special. And people can talk a lot about the technology and the business strategy of Google, which, many, many HBS case studies are written on that. I think the other thing that often people don't talk a lot about is at that moment in time, like timing's everything in life, I guess, and at that moment in time at Google, people had just come out of the first .com bust, right? So there's this enormous amount of talent that had been trained in the late 90s of company building. There are CEOs that became just product managers at Google. There weren't a lot of great jobs around in the early 2000s. Like Google was one of the fast growing startups. No, it wasn't no one thought it was gonna become like $1 trillion company, I don't think. But it was a good job and a place to be. So I think a lot of people that I think had kind of gone to startup school in the 90s were able to kind of get to Google, and they had an outsized share of just crazy, amazing talent, of just from mid managers to kind of senior managers and then young people. And then the web was also exploding at that time, right? Web 2.0, if some of your audience is old enough to remember that. So they rode this amazing wave after sort of the late 90s of like what was happening on the internet. So I think the timing of life of just like this outsized talent all being concentrated in one place, very different than today's market, by the way, where there's talents being fragmented from OpenAI to Anthropic to all these other startups. There's just so many different places. Plus the emergence of the web as we know today, that explosion, those things coupled, I think, with the brilliance of the early founding team at Google that thought about search and infrastructure, but also were insightful enough to build an advertising model on top of it, So the AdWords model, like the folks that really were inspired by Bill Brose and so, the innovators of Overture, and then doing it a little bit better, but was revolutionary. Folks like Salar Kamangar and Susan Wojcicki, all these early people that really, I think, shaped the future of the Google Ads business.
Nice. So we're not saying that Larry and Sergey got lucky. We're saying that there was some luck involved, but they were also incredible.
Oh yeah, absolutely. I mean, I think every entrepreneur, I always tell entrepreneurs, how do you manufacture luck, right? Like, it's not just like I bought a lottery ticket and just worked, like maybe some people kind of fail up and dumb luck their way into success. That does happen. But I definitely don't mean to take away from the brilliance. It's that they were ready and smart and figured out how to then capitalize on this opportunity in this moment in time and then keep compounding and building, right? Keep compounding and building. That's the thing I think great entrepreneurs do. It's not just they have the great insight. It's that they know how to then compound and build and grow on top of that and have that foundation. And I think Larry and Sergey set an amazing culture at Google, hired incredibly talented people that just knew how to kind of really grab the reins and take advantage of that. Along the way, though, I think Google made lots of mistakes, as companies do, but I think they never shied away from experimentation, at least in those early days. It was just always about try new ideas, try things, always go big, really kind of orient around the company's mission, which was to organize the world's information in a universally accessible way. They just did a few things like exceptionally well, which let them just be incredibly successful as a company.
Okay, nice. So we moved on from Google. Did you like work at a VC firm or in finance prior to starting Nava Ventures, which is kind of
I'm not a finance guy. I stumbled into venture in my late 20s. I joined a big platform fund, which was called Highland Capital. I thought I would be there for maybe like a year, learn sort of the quote unquote dark arts of venture, and then go back to like starting a company, be more entrepreneurial, right? Because I didn't have an MBA, I didn't go to graduate school. I just was like, oh, venture is kind of what TechCrunch says you should do if you're going to go start a company. That's how you do it, right? I kind of bought into that myth and narrative, and we should talk more about that too. Of like, venture is the path to success in entrepreneurship. But I stumbled into it. I fell in love with working with entrepreneur. Venture is such a humbling job. It's such a job of privilege. Every day you get to meet with people that have thought deeply about a problem, and they're telling you the secret. They're telling you this big insight. Why is a beach ball going to change the world? Why is this website going to change the world? And that is amazing. That is so amazing. As a lifelong student, I love that. And then the bonus is if I like it enough, maybe I get a chance to be on the journey with them, right? It's not just a 1 hour meeting. It could be a 10, 15-year journey. And then you get to, invest in them and then like work with them. And then when they win, you win, right? All that stuff. I was like, this is like, thank you, Don Valentine, and all these people that Arthur Rock that started this industry. I was like, what an amazing model. Yeah.
Let's dig into that then. The point you just mentioned is, when do you think that a founder/entrepreneur needs VC funding when, because obviously some routes they do, and then some routes maybe they should just build it themselves or get other ways to finance a business?
Yeah. I think there's this myth in the Valley that fundraising is kind of success, right? And I think a lot of young entrepreneurs buy into that. I think people that are serial entrepreneurs know that's not true. It's actually the most expensive way to finance your company, right? You're giving away the most precious thing, the equity, right? Your blood, sweat, and tears. You only have so much of it. It's a finite amount of equity, and you're selling that at a deep discount to what the future could be for your company to fund it to kind of go forward, right? And so it's this kind of funny thing because the better way to fund a company is cash, right? It's like I'm selling a product and I grow it and etc. And I think I often I like cars, and I think about venture funding as there's gasoline, which is fuel in the engine, right? And some cars, like your local dry cleaner, makes a little bit of cash, funds the engine, goes a little further. I think venture capital is a very particular type of fuel. I think of it as nitrous oxide. It makes you go really fast, a little bit out of control. Some engines are built for it and they can handle it, and they just like break through to the other side. Companies like Facebook, Google, etc. Some companies, it's like you should never have taken that money because you have an amazing business, but it's not venture like. It doesn't absorb that capital in the right way. And I think the danger is that a lot of entrepreneurs kind of don't realize the expectations of what venture means. And most venture capital firms, when they invest in a company, they want an IPO, right? They want that big outcome. That's what they're playing for, right? But there's fewer IPOs than ever in the history of IPOs, right? Like it's harder than ever to go public, right? Like to say that you have to do 500 million to $1 billion in ARR to be a public company, that's crazy. That's just such an audacious goal. So I think a lot of entrepreneurs have to really be thoughtful about, what dynamics are at play, because once you take on venture capital, once you get a venture capitalist on your cap table, it's very difficult to get them off, and it's even if they personally want to get off, it's still difficult, right? It's just it gets all construed and wrapped together. So I think entrepreneurs should think really hard about the capitalization strategy. I don't think there's enough dialogue around that in the Valley.
Absolutely. And I think it's really I guess back in the day, Nike made it really cool to have Nike clothes, and then Apple made it really cool to have an iPhone, maybe less now. But what I respect the VC industry for doing is making it cool to have VC funding.
It's crazy. VCs are cool. That doesn't even make sense. Like Nike, cool, right? Like VCs is just like you're kind of a middleman, between capital and the company, and you're helping them company build. It's a valuable job, but it's just funny how there's this kind of like cool factor to go to. For me, that's just weird. I don't.
Very impressed. Let's move on to the state of VC, because you mentioned lack of IPOs. And so if there's a lack of how VCs can, and founders can get a big payday at the end, what happens earlier down the funnel?
Yeah. So I think a few things have happened in the last, call it decade or so with the VC market, which I don't think are very healthy, actually. One, I think that it's longer and longer to go up public, right? Becoming a public company and operating pump company is just generally harder than ever. Regulatory restrictions, etc. It's very difficult. I think you end up managing a company quarter to quarter versus really, it's very rare. I think a public company CEO can chart the long-term vision and ignore quarterly performance. It's just, that's the way the markets are set up, for better or worse. So those dynamics are at play. The other dynamic is play. There's so much private capital in the system, So I focus on early stage investing, but you think about companies that are just phenomenal companies like a Stripe or a Databricks. These are huge companies, clearly have added tremendous value to the world, have impacted the world in amazing ways, right? And they're worth tens of billions of dollars, just huge amounts of money. The fact that they're not public yet, that they've been able to stay private, I think is an interesting kind of phenomenon that's happening, right? If they can raise money at kind of whatever price they need, they can operate their business, run it well without having the scrutiny of public markets. I think it just changed dynamics, what it means to be a large company today, right? And also, the secondary markets have emerged, which have become sort of a place for liquidity for people, right? So, I think all those things are just changing the shape of what venture capital means, and I don't think this necessarily a positive for the industry. I think it just makes things a little bit more opaque, a little bit more about who's got the right access, and I think it puts a lot of risk into the underlying funders of these ecosystems, right? Less about me as a VC, but like with the LPs and endowments and foundations and all these people that end up having lots of concentrated positions that they may not be able to get out of.
Absolutely. Let's bring back, well, I think there has been more IPOs in like recent weeks. And so maybe they're coming back.
Yeah. So it's always like a moment in time, right? I do think hopefully the market is getting better, right? We're sitting here and it's kind of like midsummer 2025. My hope is that the markets are getting better. But in general, I would say the number of public companies out there, it's decreased a lot. That to be a $1 or $2 billion market cap company now is thought of as kind of a small cap company, right? Like you want to be a $10 billion, $20 billion company, which is, I think, pretty crazy. Like that's the expectation,
So let's say a B2B entrepreneur founders listening, they have the right business to take on venture capital. How can they differentiate between different VCs?
Yeah, I'm so glad you asked that question because one of the things I love to share with entrepreneurs is take the time to get to know your investors. I think there's these stories about all the drama of fundraising, right? It's like, I meet you on Monday and then on Tuesday I'm closing and blah, 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 like something out of a TV show or whatever. I think that's so dangerous. I think I feel like I've met so many founders that take longer to interview people on their team than to interview their investors, right? And you can fire an employee. Very difficult to fire an investor, right? You're kind of stuck for life, right? Or at least for the company's life, right? And so I think what most founders should do is well ahead of an investment process, get to know VCs, right? Get to know them, spend time with them, get to know their CEOs, build those relationships with people they've invested in. Figure out like, hey, where's that person strong? Where's that person not strong? VCs kind of most VCs are, part of firms. There's a solo GP model, but understand within that firm, what kind of power does that venture capitalist have? They may be a very prestigious firm, a la Sequoia or what have you, but do they have the power to invest, right? Like who's their boss at the end of the day? What are the incentives of that person, right? So how do you really figure out if you're winning together with that venture capitalist? Because I think some things that happen, I think now, especially because there's just been such a proliferation of VCs and there's some of these firms have hundreds of people, etc. And it's like, you really, if you were able to get like a Mark Andreessen or Ben Hortz on your board, maybe you're very happy because they're the namesakes of the firm. But if it's like somebody, a junior partner, really understand what is that person's motivations, right? How are they going to be with you on this journey or not? I think that's really an important thing to do for entrepreneurs as they get to know VC firms, and doing it well ahead of a process is important.
Absolutely. You mentioned like going on the journey with the founder or like building the company with the founder. Because correct me if I'm wrong, but when VC invests money, it's not like in the agreement that they will give like, I don't know, 10 hours of their time a month to help build the company. So like, how does that actually, work? Is it just like you're naturally incentivized to try and help them because you obviously have a chunk of the business, or is it more formal than that?
Yeah, I've seen some more progressive, innovative VCs create new types of structures in their term sheets where it actually might be a true commitment, of like outlining some of that stuff. But that's very, very rare, maybe 1%, very rare, right? And I don't even know if it's honored in terms of like, is there a penalty if you don't do it, right? But it's nice marketing. Most of the time, it's about really, is that VC your people, And I think all VCs want to help. I don't think they don't want to help, but I think I always believe in this idea of show me a fund size and I'll show you their strategy. So if you're a $200 million fund and you're like, well, from that $200 million fund, we're going to do 100 seed bets or some huge number of bets, right? It's just not humanly capable to manage 100 companies and add value to 100 companies, right? It's almost like just buying a stock and seeing like, if it works, I'll try to lean into it more, maybe we'll buy up if it doesn't, right? So I think founders should really look at like, okay, how many ways is this individual chopping up his or her time? Is it being divided across 200 opportunities or 10 opportunities, right? Are they able to like really spend time with me or not? And when they spend time with me, is it quality time? Do they know what they're talking about? I think that's really important too. I think with a lot of founders that are very technical, so I work with a lot of technical founders, and like, how much time am I spending with them just explaining kind of the basics of the technology versus getting to the more interesting conversation, right? I'm always like, am I speaking arithmetic to this person, or are we getting into the calculus, right? Because you want somebody that can leapfrog and speak calculus to you, right? If you're kind of always educating them about the basics, they may just give you some generic rule of thumb advice, and I see that a lot with VCs and founders. We're like, oh, we're struggling with sales. Well, you should just hire a CRO, you should just, yeah, that's half true, but like, let's really understand, is it the shape of the product that's the problem? Like, let's kind of get into those weeds. And is that venture capitalist willing to spend time with you on it?
Yeah, nice. And I presume then you're like one of the value adds of Nava Ventures / having you on the board is that you can get like more into the detail technically.
I always joke like hopefully I'm the least smartest person in the room, on the boards. And I think the value add is really, I literally like to think of it as like helping founders become their best self. I think sometimes VCs take outsized credit for success, and it really is a founder's journey. And I think the best founders are able to become their best self and achieve those goals.
So I guess when founders work with you, they get someone with presumably like the more technical expertise that you can like bounce ideas around on.
That's right. Yeah. And so when I work with founders, I think it's important to speak their language, and so, as I said, sort of speak calculus to them. But I also like to approach it from a bit of place of humility. So if I'm the smartest person in the room, that's probably not a very good room to be in. Founders spend thousands of hours thinking about a problem. I spend some time thinking about it. So I'm always looking for them to say, what's that deep insight? What's that unknown? Tell me that real secret, One of the things I always tell my team is I know more than a founder. I'm definitely not investing. But when you think about sort of the dynamics in boardrooms and helping founders, oftentimes I think VCs take outsized credit for success, because the founders are doing the hard part. They're living the journey every single day. And I think the best VCs try to take an approach of helping those founders become their best self. That's the key, because every company is different. Yes, there's patterns and companies rhyme. I don't think they repeat necessarily. There's good horizontal patterns across industries. And I think that's where VCs can kind of pattern match and add value and see those types of things. But I think if you're really building a special company, it's unique. It's not just a rinse and repeat playbook, and I think the best VCs help to bring that out from their founders of lean into those quirky points of view, those unusual points of view, those less common things. I think when they do that, those founders at the early stage in particular, where I like to spend time, build a muscle, which allows them to be very, very successful. There's this funny thing I've seen in my time in the Valley, 15 years in venture, is that the more capital sometimes people raise, the more average they become the thinking, So, you raise all this money from Goldman Sachs or the banks or whatever, and you think, well, when I was doing my Series A, I had this really interesting point of view and I was dismissive of all these other opinions and whatever. And so sometimes the thing that happens is you raise like hundreds of millions or billions of dollars, your dilution, your vision gets diluted, right? Because you just keep telling it to other people. All of a sudden now you start worrying about, well, how the market perceived me, how the bankers perceive me, all those types of things. Versus when you started the company, you're like, how do my users and customers think about me, right? It wasn't about like some SaaS multiple or all the metrics that are out there. It was like pretty simple. It was like, I'm building a widget. Does the world love my widget? And if so, do they spend outsized time or money on my widget? Right? It's pretty simple. It's almost like common sense, right? And then that just changes over time. This weird thing. You start kind of falling into like all these metrics and all this stuff, which, is part of the story. But there's many companies that kind of build great metrics, but don't really have great products.
Absolutely. What is like the day in the life of a VC? Like in my head, it's just you're having like loads of coffee chats with different potential founders, or is it not like that in reality?
I love it because it goes back to this idea of like, I'm a perpetual student and you just get to meet so many different people every day. You get to research lots of different ideas and stay on the cutting edge of all the things that are changing the world and the technology. And, I love that. And you're always processing information, trying to get strong points of view on what's working, what's not. So the day in the life is very odd, I would say, because, I think of VC as a service industry, right? It's customer service. I have two customers, my entrepreneurs and my investors, and I got to do right by them. And you got to be on call, ready to go when those entrepreneurs reach out to you. You got to be able to move. And I think it's just wonderful because every day you're meeting somebody that really could have that potential to build a thing that changed the world. And I think about my roots as a kid that grew up in humble beginnings in rural Kentucky in tobacco fields, right? And it's like, oh my God, I'm in the heart of Silicon Valley. I have the chance to compete with some of the best venture capitalists in the world, that have built legendary companies and products. And it's like, that's amazing to have a seat at that table and then be able to go and work with entrepreneurs that could define the future.
Definitely been a journey, hasn't it? What if then like the pitch or the like differentiating factor that you guys have is there, because I know some VCs like focus on specific verticals or specific niches. So what if that for you?
I'll say the meta point I think about with how the VC ecosystem has evolved. There's so many different VCs and so many different funds. From an entrepreneur perspective, it's awesome. Think back to the 90s, maybe when there were a couple dozen funds or just a few, right? And now there's so many. So it's like Baskin Robbins. There's 31 flavors of ice cream, right? Go figure out who your people are, right? If you're a SaaS company, if you're a hardcore deep tech company, if you're a consumer marketplace, there are people that have those expertise or people that might be your people. So I think from an entrepreneur lens, that is wonderful, right? It's less about, oh, there's a chosen few king and queen makers that will like kind of control your path to success. So I think that's very good from an entrepreneur. What we do and what I love to specialize in is the art of Series A. I think Series A is a very special moment in a company's life where, you've raised some pre-seed and seed capital. And the Series A, you really have this opportunity to build the foundations for a flywheel that could become a great company, right? I think strong founders can kind of grid their way to a $20-30 million business, right? It can sell that expression of sell ice to an Eskimo kind of thing. Like, I think great founders can figure that out, right? But the really, really wonderful ones at the Series A, they can start to build those fundamental pillars and foundational elements, which makes a flywheel. So it might have gone to 20 million through just founder-led sales and grit. But if you build that flywheel, that 20 could become 50, 100, and you learn the right muscles. And so I think the Series A is is a foundational moment in a company's life where if you're not building those muscles, you can still get to a Series B and C, but you might be building more in a house of cards, right? There's a shaky foundation there, right? And that's where I really love to specialize. And, as somebody who's been fortunate to be involved with Google and teach design at Stanford and product thinking, I think those expertise really come to bear at the early stage.
At Series A, are you like expecting the company to like have full product market fit and then they use that cash to scale, or does that come later?
Great question, because I think every Series A has so many different definitions, right? Some of our companies, I would say, historically have had good PMF, product market fit. They're there, they're scaling. Some, it's like 5 guys and they have momentum and a brilliant idea, but are very, very far away from like shipping the product in the real world. It's hugely variable, and you have to take into account the context in which that company is operating, right? If it's more of a services business versus more of a deep tech company, those are very different ways to evaluate those companies based off the market, right? And you have to really understand that. So I always get a little worried when people are like, well, here are the metrics we care about, right? If you hit 1 million in ARR or something like that, then you're ready for Series A. But I'm like, that's so different across so many different companies. I always tell my team, all revenue is not equal. You have to really understand like what is going on in that company. And that's where I think it's important for VCs to really know what they're talking about, right? To really understand the industry dynamics, market dynamics, because financial spreadsheets do not tell the full story. Maybe at the growth round, there's more there, but at Series A, it's so much about the individual people, those really kind of qualitative factors of market and how people are spending time with their products.
I love that phrase, the art of the Series A. I'm thinking maybe it could be like the tagline on your website.
I like that. Okay.
But Manish, that was a real masterclass on the VC world. If Nava.vc is the website.
That's right. Yeah. www.nava.vc.
Cool. Epic. I mean, yeah, your headline is actually like pretty epic already. I love the branding. So we're going to link to that below. We'll link to your LinkedIn profile below. Is there anything else we should link to or mention?
That's great. No, that covers it.
Epic. Manish, so the first, and maybe we'll have more VCs on the show, but I think this has been a really good starting point for the B2B entrepreneurs listening. Specifically like your advice to them on making sure that you find the right one, and you don't just like spend less time hiring a customer service rep than less time choosing a VC than a customer service rep. So thanks so much.
It's been wonderful, Tom. Thank you so much for having me.
Okay, team. The first VC on Confessions of a B2B Entrepreneur. If you like the episode, please go and give a rating or review on Spotify or Apple Podcasts. Send me a screenshot, and then I'll give you a shout out in a future outro on the show. I'll give you a shout out and also your business as well. Thanks to Manish for coming on. Thanks to Fame for producing. And of course, thanks to you for listening.